Hi, and welcome to another daily recap. So today I'm going to recap October 29, 2024, and it's Tuesday, and it's 125 of the road to 1 million content. So to give you a summary of what happened is today I didn't get any trades on both EU as well as DU. In EU, I almost got a trade, but the actual strategy didn't play out, so I didn't get any trades on EU. So let's jump into the whiteboard and see what happened on this day. So before jumping into the technicals, first we must understand the fundamentals. I'll show you what fundamentals is there today before proceeding into the technicals. Today at 2 p.m. there was two red folder news, so I must be careful of trading during the high impact news because of two reasons. The first one is that price may fluctuate very rapidly, and sometimes my stop losses get being taken out. Sometimes my take profit gets also hit. The thing here is I'm trading prop firms. So prop firms specifically has some news restrictions. So I must be careful when placing the orders because you cannot place a trade certain time before and after the news. That's it from the fundamentals. So let's jump into the technicals and see what the market has to offer for us today. This is euro dollar and this is the daily chart. The swing structure is bullish, internal is bearish, and if I zoom in, you can see the details here. The price has mitigated the daily demand, swept some sell side liquidity, as I understand, but the price is now consolidating. And it has took the buy side liquidity here. And after it took the buy side liquidity, it again started to consolidate. Now what I'm thinking is price is in a consolidation. Now it's very clear that the price is in a consolidation. And probably the price can go down because a low resistance liquidity is being formed here. So what I can expect is price can sweep the daily buy side liquidity, I mean the previous day high liquidity, and then it can take out the previous day's low. Probably it can take the previous day's low and reach the daily target, or it can consolidate some more time and then reach the daily target. That's a different story. But for now, I can say that the price can take the previous day high. So let me read the annotations. Price swept the low time frame buy side liquidity above, which I can say is enough for the market to push down to take out the sell side liquidity due to heavy bearish momentum. But the price swept the previous day's low. This one, previous day's low. That is, price took some sell side liquidity and then pushed up. Thus, my expectation is that price can take previous day high before pushing down, or price can use this sell side liquidity to push the price further up. I forgot to mention that point. Since the price took out the sell side liquidity here, not only this buy side liquidity can be targeted, this can also be targeted, which means today would be a bullish day. But given the current bearish momentum, I'm just sticking with the bearish order flow, and then I'm expecting the price to take out this previous day's low and then target the previous day's high and then the daily drawn liquidity. So it's as simple as that. Now coming into the 4-hour chart where you can see the pullbacks, and yeah, here you can see that the price has made as a low resistance liquidity here, and price has tapped into the 4-hour supply. So let's zoom in for better clarity and details. So price took the buy side liquidity here, chalk bearish, and now this is the freshly formed supply, and price mitigated this supply, and price moved from supply to demand, demand to supply. If the order flow is bearish, it will move from demand to supply, and then flip that demand, come down again, demand to supply. So like that. Since now this order flow is bearish, price is moved from demand to supply, and using this supply, price can now flip this demand and take all the low resistance liquidity here, daily target, as well as the weak internal low. So there's a ton of reason why the price can move down, and this this demand to be targeted. And also you can see that the demand has several rejections here, and there's a bit chalk bearish also. So we can expect the price to push down. Price mitigated the 4-hour supply, and now the demand is getting weakened. But the question is whether supply could take control or this is just a small pause before another push up. So it's just a basic of trading. When the momentum is very high, price makes a small pause, profit booking, and then pushes high. So it could be like that kind of you know uh, liquidity engineering, or price actually the demand is getting weakened. So either case, I must be ready. So that's why we are having H1 to guide us into the session. Now here you go. This is H1. The okay, I didn't take the swing structure. It's fine, but we know that the swing structure is uh, bearish and the internal is bullish. So the swing structure is also bearish and the internal is also bearish. And this is the 4-hour supply which the price mitigated, and you can see the details here, and you can see the price has stopped bearish, and now the bearish momentum has kicked in. So this would be my POI where I can look for shorts, and this would be the buy sell liquidity which I'm expecting the price to take this buy sell liquidity chop bearish, especially from POI take the trade. It's as simple as that. So price mitigated the 4-hour slash H1 supply and chalk bearish. As I can look to follow this bearish order flow till the price reaches the weak low. Uh, Mostly I used to take trades based on the sweep zones. Price can take out this buy side liquidity, and then if it can chop bearish, then that would be the freshly formed POI. Then I would be happy to take trades. So that actually works most of the time, because this is H1 chart, and if the price takes the buy side liquidity of an H1 candle, so that would be very high probability that the price is going in the opposite direction, and I take trades with confirmation. So all to all, it's highly probable trade, but the frequency of this occurring is very low, very low. I'll tell you why today itself. For shorts, ideally, I can wait for the price to form a bearish steep zone, but I'm happy to follow the bearish momentum if it happens. So it doesn't mean the price needs to shoot for all the buy side liquidity. It can take some lower time frame buy side liquidity, and then it can push down. So it can happen. So if that happens, then I'll be happy to follow this bearish order flow till the price takes out this weak low. And why this is a weak low? Because this low failed to take out this high, and it has stopped bearish. So it's this low is the first target that will be targeted by the price. So moving on, at 11:02 GMT plus 1, price took the buy side liquidity. You can see the strong rejection coming off, and then the price pushed down, made chalk bearish. So this is what I was telling about, and this is what I was discussing about. Now this is a high probability scenario. If the price reaches this POI, I'll definitely take a trade. This is phase A2 because both the internal and the swing structure is bearish in the H1, so it is phase A2. And the price not reacting after my time frame POI, this box cannot be ticked because, as you know, price is tapped into the daily demand structure. So this box is not ticked. In line with the medium time frame order flow, yes. Medium time frame POI is score of 4/8. Yes, you can check this one. And high time frame, yeah, they are supporting this bearish idea. What are the other confluences? It has swept the Asian eye, and supply chain is being respected. You can see the supply is being respected, and now I can expect this supply to be respected. There is no opposing supply and demand zones. Only this one, there can be this demand zone, but it is formed during the Asia. So I can say that there is no opposing supply and demand zones. And there is time-based liquidity to target. What is the liquidity? London low, Asian low, previous day's low. So none of liquidity can be targeted. And it has also got a structural liquidity to target, that is the weak internal low as well as the daily target. And in the 4-hour, you can see that there was a low resistance liquidity. So everything is perfectly aligned. Opposing demand, what are the risk factors? Opposing demand. Yeah, actually, this point cannot be here because I consider this demand as valid maybe it can hold, probably. Price can push up to take out the previous day high liquidity. I think, yeah, yeah. Actually, there was you can see kind of equal loss being formed. So I can expect the price to push up to take out this liquidity, but most often it does not happen because this is H1 chart and there's a strong buy sell liquidation and then chalk bearish. So obviously, price I am expecting the price to be bearish today. And the entry model is very simple. It is LC1. I'm going to take this one because of this value gap, and you can sorry, not only that one, price has actually made a pullback here. So I can take this as the lid, and if the price just taps this POI, I'll be entering the liquidity candle. So all I want is the price to pull back to tap into the POI, but unfortunately it didn't do that. The price, once the chalk bearish is made, there was no turning back. Price just came, went all the way down. I expected the New York to push the price up to make a pullback to induce some sell side liquidity and then push down. But you know, the bias was so strong that the price pushed down rapidly and never gave me an opportunity to enter. So that's the end of the day. Analysis was perfect, but I was not able to execute because price didn't play out that pullback that I expected. So not always what I expect happens, but my analysis still holds. All I need to do is wait for the perfect opportunity and grab that opportunity. Again, I define luck as when hard work meets any opportunity. That's called luck. So today I'm not lucky. So next, let's see what happened on next time. This is all about EU. So let's jump into GU and see what happened on GU on this day and why I didn't get any trades on GU. So this is GU and this is a daily chart. You can see the swing structure is bullish, internal is bearish, and price swept the buy side liquidity here. And then now what I can expect, the price can push down to uh, take out the sell side liquidity or the daily target. So GU, the target was the daily target as well as the demand here. So price can be magnetized towards this demand zone because there is nothing to the left from which the price can react upon. So buy sell liquidity sweep and sell side target and daily demand below which the price can be magnetized. Obviously, the bearish would be mean the bias would be bearish. So let's zoom in to just have some details here. Price again took the previous day high, thus there is a high probability that the price may be bearish today to take out the daily target or, or at least take out the previous day's low. So this would be my first target, and this would be my second target, and this would be my third target. This is the 4-hour chart. You can see the pullbacks right here, and the swing structure is bearish. Internal is also bearish. So let's zoom in so that the details are visible to us. So this low failed to take out this high. So it's clear that this low will be taken now. So this is my first target then, and this would be my second target, and this would be my third target. And this is also previous days flow, remember. So high probable low which will be taken today. And one more thing is that there is a low resistance being formed here. So shorts are very much high probability today. But there is one caveat. As per my rules, even a quick break is also considered as a chalk bullish. I mean a chalk. So currently the fractal structure is bullish. I can expect this demand to hold and push the price up and take out this strong internal high. So is that possible or not? That will be visible only during the session bias and session momentum during the London session. The point to note is that though the price has liquidated the high, technically it can mean that the price has stopped bullish and and the demand can hold and push the price further up. I must keep this in my mind and add to the risk factors. Having the risk in mind lets you take calculative risk and highly professional decisions. So a price took the Asian high, almost took the Asian high. So all I can do is wait for the price to chalk bearish, and then I can look for trades. High time frame bias is bearish. The shorts are high probability today. For shorts, I need to see the price to take some buy side liquidity and chalk bearish, or continue the bearish momentum. Either of which is okay for me to take the shorts. If the price didn't take the Asian high, even if it forms in perfect equalize, I don't bother. If the price takes out this low, then if from the freshly formed POI, I'd be looking for short. So price took the Asian high. Not all I want is the price to chalk bearish. And yes, it did. But this is kind of bit weird because the Asian high is the one that I expected the price to take and chalk bearish, but price closed above it and then went long way up and then chalk bearish. If I can see, the price has taken this liquidity and it has also taken the London high during the London lull and then chalk bearish. This is kind of high probability for me. I can look to target these low resistance liquidity, this weak internal low, that is the weak structural low, as well as um, the buy side, the sell side liquidity below the 4-hour demand zone, which would fail soon. But now I want the 12 a.m. the 12 p.m. candle to finish printing because this candle, if it closes below this chalk line, then that means that the bearish momentum has kicked in. Or if it just wicks below, then that would give me an contracting signal that this could be a sell side liquidity sweep and the price can push further up. So that all depends on the 12 p.m. candle. And the 12 p.m. candle actually failed me and it just wicked the lows and you can see a strong rejection that came off. So I was not interested in the trade because with a strong rejection, I can expect the price to push further up and take out even this high. So it's not a safe habit to trade during these kind of breaks. I'd rather wait for the body close and then take the trade. But this is fine because since this is H1, you can take the trade for the big close because H1 is it takes 60 1 minute candles to form one H1 candle. So this break is not a normal break that you see in the M1 or M5. This is a strong break because H1 candles are the highest possible candles that you can trade that you can trade as a day trader. So you can trust the H1 candle breaks, but I personally prefer the candle closure for taking shots. So that's the end of the day. Price swiftly sells a liquidity, and it is not the bearish chalk that I expected to happen. As I'm not interested in shorts today because of the low probability conditions. It's not actually it's low probability for me, but it may or may not be a low probability for you. Yeah, that's it from today. So to summarize again, I didn't get any trades on both EU as well as CU. Okay, see you tomorrow on the next day. Until then, cheers, guys. Bye.